internal internet connection, and please try to re-log in. And should there be any questions addressed to the panelists, please keep them until the end of the session, where we will then open the floor for the Q&A session for both our physical and virtual attendees. Ladies and gentlemen, members of the media, without further ado, we are pleased to invite Yang Berbahagia Tan Sri Abdul Wahid Omar, Chairman of Bursa Malaysia, for his opening remarks. Dipersilakan Tan Sri.
Thank you, Izrin. Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. And very good afternoon. Welcome to Bursa Malaysia, and thank you for attending our media briefing for Bursa Malaysia's financial year 2024 financial results. I'll begin with a brief overview on how the Malaysian economy and the capital market performed amidst the global challenges last year, followed by key highlights from our financial results by Dato' Umar and Wan Rashida. Ladies and gentlemen, the year under review was marked by uncertainty and instability due to the rising geopolitical tensions, fluctuating interest rate policies, and persistent inflationary pressures. Despite this challenging backdrop, global economic growth remained stable, with global GDP growth stabilizing at 2.7% in 2024, which matched the same level in 2023. This stability was supported by resilient labour markets and the ongoing recovery in global trade. On the home front, Malaysia fared better, exhibiting resilience and positive momentum with real GDP growth of 5.2% for the first 9 months of 2024, while inflation was contained well below 2%. Based on Malaysia's fourth quarter 2024 GDP estimate, our GDP growth eased to 4.8% year-on-year in the final quarter, resulting in a full-year GDP growth forecast of 5.1%. Encouragingly, Malaysia's total trade in 2024 grew by 9.2% year-on-year, reaching new trading heights and surpassing the 2 trillion ringgit mark for the fourth consecutive year at 2.9 trillion ringgit. And this exceptional performance resulted in a trade surplus of 137 billion ringgit. Now, the growing confidence is also reflected in the increased approved investments, which reached 255 billion ringgit for the first 9 months of 2024. That's almost 11% higher than the 230 billion ringgit approved during the same period last year. These positive factors, along with external influences such as the anticipated lowering of US interest rates, resulted in the Malaysian ringgit strengthening by over 2.7%, reaching the 4.47 level at the end of 2024, compared to 4.61 ringgit at the start of the year, and emerging as Asia's best performing currency for 2024. Now, overall, the Malaysian economy continues to be well supported by a robust, capitalized, liquid, and well-regulated banking system to the tune of 3.6 trillion ringgit, and this is complemented by a diversified and well-functioning capital markets to the tune of 4.1 trillion ringgit. Now, turning to the equity capital market, the benchmark FTSE Bursa Malaysia Kuala Lumpur Composite Index gained 12.9% in 2024, a healthy recovery from its performance at the close of 2023, making Bursa Malaysia one of the best performing markets in ASEAN. And this is in part drove the market capitalization of Bursa Malaysia to surpass the 2 trillion ringgit level since May 2024. Now, market activity also showed an upward trend, with the on-market trades average daily trading value, or ADV, increasing by 53% to 2.06 billion ringgit from 2.06 billion ringgit in 2023 to 3.1 billion ringgit in 2024. Now, when it comes to valuation, we believe that the valuation remains attractive, with the FBM PLCI blended forward 12-month price to earnings ratio at 14 times, below the 10-year average of 15.2 times, making the exchange still an appealing investment destination. Now, as the government's policies and reforms take root and continue to deliver results, the Malaysian capital market is well positioned to support the nation's growth, enabling businesses and investors to benefit from this progress. Ladies and gentlemen, turning our attention to Bursa Malaysia's financial performance for the financial year ended 31st December 2024, despite a challenging global environment, Bursa Malaysia posted another year of strong performance with a profit after tax, zakat and minority interest of 310.1 million ringgit, representing an increase of 22.9% from the 252.4 million ringgit recorded in the previous financial year ended 31st December 2023. We recorded the most vibrant IPO market in ASEAN with 55 new listings, raising 1.65 billion US dollars or 7.4 billion ringgit, surpassing Indonesia Stock Exchange at 899 million US dollars and Stock Exchange of Thailand at 811 million dollars, the Singapore Exchange at 34 million dollars. Now these 55 listings added 31.4 billion ringgit in IPO market capitalization, and that's 100% year-on-year increase from the level achieved in 2023. And the number of IPOs is significantly higher than the 32 listings that we recorded in 2023 and ahead of our target of 42 listings for 2024. And this is certainly the highest that we've achieved over the past 19 years since the year 2006. Now, the exchange also paid significant attention to the development of sustainability in our marketplace, with a particular emphasis on the quality of sustainability disclosures by our PLCs. This commitment was reinforced by the enhancements to the sustainability reporting requirements, which took effect on 1st January 2025, adopting the National Sustainability Reporting Framework, or NSRF. Now, overall, 2024 was a solid year for Bursa Malaysia, and it goes without saying that we remain committed to implementing initiatives that strengthen our position and appeal as a key marketplace for fundraising and for investment. Ladies and gentlemen, on behalf of the board of Bursa Malaysia, I'm pleased to announce a final dividend of 18 cents per share and a special dividend of 8 cents per share for the financial year ended 31st December 2024. And this is on top of the interim dividend of 18 cents per share that was already paid in August 2024. Now, when it comes to the regular dividend, this will bring the dividend amount to 36 cents per share, representing a dividend payout of 93.9% of the profit after tax and after minority interest recorded for the financial year ended 31st December 2024. Now, I would like to hand over to Dato' Umar and thereafter Puan Rashida, who will provide deeper insights into Bursa Malaysia's performance. Over to you, Dato' Umar.
Thank you, Tan Sri, for your opening remarks. A very good afternoon to all, and welcome to Bursa Malaysia's financial year 2024 results briefing. And the presentation deck, which I will be sharing with you, is now available on our website. I will first go through, as we do, our strategic highlights, which will include an update on financial year 2024 headline KPIs, financial highlights, market performance in this session. We'll also be announcing our 2025 headline KPIs and share some of the exchange plans going forward. And after that, Puan Rashida will also review our financials in further detail. For the full year of 2024, our PATAMI rose 22.9% year on year to 310.1 million, which was the highest we've achieved since the COVID pandemic. With that, we are pleased to announce our final dividend of 18 cents per share and a special dividend of 8 cents per share. The entitlement date for the dividend is today, 27 January, and payment date is on the 25th of February 2025. On an annualised basis, the dividend per share for financial year 2024 amounts to 44 cents, translating into a yield of 4.9% based on our share price of Ringgit Malaysia 8.96 on the 31st of December 2024. The exceptional net income growth recorded can be attributed to operating revenue that jumped some 27.8% year on year to Ringgit Malaysia 757.7 million, contributed mainly by the solid performance in the securities and derivatives markets. I'm also pleased to announce that we have achieved all of our 2024 headline KPIs. To recap, some of the key initiatives that we have implemented in our 2024-2026 strategic plan include introduction of the new My Bursa features and the growing of our user base to enhance investor engagement experience, the expansion of offerings and new features on our new multi-asset platforms, namely BCX, our VR Capital, as well as Bursa Goldina, and launch of onboarding of company solutions and their suppliers onto the Centralised Sustainability Intelligence Platform, or CSI solution. We expect to ride the tailwind of the framework such as the 12th Malaysia Plan, New Industrial Plan 2030, National Energy Transformation Roadmap and National Semiconductor Strategy, which will attract more investments and drive economic growth. This coupled with the government's fiscal consolidation plans to further strengthen the country's financial position. The domestic market has strong liquidity, and all these factors combined should support a conducive stock market. During the course of this year, we have launched CSI as well as My Bursa and Bursa Reach, and these are our new asset classes. Now, I'm pleased, as we look at our roadmap, I'm pleased to announce that we've made good progress in implementing our strategic roadmap 2024 to 2026 across all 5 strategic pillars. To name a few: E-Trade, a touch-and-go wallet equities trading feature in partnership with Touch and Go and Up-in-One. Edible oils, derivative products, soybean, FSoy, the first non-palm-based oil futures contract in the market. And we've also introduced used cooking oil FOB Straits Platts futures contract, or FUCO, to offer a reliable and transparent platform for price discovery and hedging of used cooking oil. The pre-Bumi Bursa of Malaysia Zakat Index to recognise PLCs that adopt corporate Zakat practice. The world's first Wakaf ETF, and of course CSI. With respect to our direct-to-market investment products and solutions, several new features were introduced on Bursa Goldina, namely Zakat Information, Gold Price Alert, the exchange feature, and the launch of BR Capital Secondary Market, enhancing liquidity of our debt fundraising platform. We're continuing to develop the various components of My Bursa, which is a key tool for us to enhance CX and customer engagement. And on the same sustainability front, Bursa 1818 received the validation from Science Based Targets Initiative for near and long-term GHG reduction targets. We're developing an ASEAN interconnected sustainability ecosystem and a centralised ASEAN ESG data infrastructure in collaboration with IDX, SGX and SET. Sustainability reporting requirements for main and ACE markets were enhanced to align with the National Sustainability Reporting Framework, or NSRF. I'm also proud that we were externally recognised with several awards in 2024. On top of the Billion Ringgit Club Awards by The Edge, we were recognised for our excellence in the Islamic capital market. We received Islamic Financial News IFN Awards in 2 categories. Best Stock Exchange for Islamic Listing, our 7th consecutive win since this category was introduced in 2019, and second runner-up for Best Interbroker for Islamic Transactions. And we'll keep the momentum and going and strive for even more global recognitions going forward. Now, looking at our headline KPIs, we're excited to announce that we've met all 5 headline KPIs for the financial year 2024, including profit before tax, non-trading revenue growth and reduction in carbon footprint. We made exceptional IPO performance in 2024 with 55 IPOs, the highest number of IPOs since 2006. And an IPO market cap of Ringgit Malaysia, 31.4 billion, well surpassed our 2024 target. 2 innovative sustainability products and solutions are successfully launched in June 2024, the renewable energy certificates, as well as our centralised sustainability intelligence, or CSI platform. Now, for our financial year 2024 financial highlights, I'm delighted to share that our operating revenue climbed 27.8% year-on-year to Ringgit Malaysia 757.7 million, driven by a double-digit growth rate both in trading and non-trading revenue. Our annualised return on equity rose by 6 percentage points higher to 37% compared to 31% in financial year 2023. Moving to the cost side, the high year-on-year operating costs was largely due to increased staff costs, IT maintenance and service fees. A once-off reversal of a provision in financial year 2023 also contributed to the higher percentage increase of operating expenses in financial year 2024. As a result, our financial year 2024 PATAMI of Ringgit Malaysia 310.1 million was 22.9% higher compared to Ringgit Malaysia 252.4 million recorded in financial year 2023. Consequently, EPS increased at a similar pace at 22.8% to 38.3 cent per share in financial year 2024 from 31.2 cent in financial year 2023, while cost to income ratio for financial year 2024 remained stable at 48%. If we look at slide 13, securities market overview. Securities market made up some 70% of our operating revenue in financial year 2024, mainly driven by ADV, which rose by 53.2% year on year to 3.15 billion. Trading velocity in financial year 2024 was also higher by 10 percentage points at 39% compared to 29% in 2023, and total market cap of Bursa reached Ringgit Malaysia 2 trillion for the first time last year, to reach an all-time high of Ringgit Malaysia 2.097 trillion on the 17th of July 2024. It closed the year at Ringgit Malaysia 2.081 trillion, which was 15.8% higher than the preceding year. Bursa Malaysia ranked #1 amongst ASEAN exchanges for the number of IPOs recorded and the funds raised through IPOs in 2024. The 55 IPOs were above our target of 42 IPOs in 2024. It also marked a 71.8% increase in the number of IPOs compared to 2023. The 51 IPOs listed on the main and ACE markets closed at an average of 48% premium above their listing offer prices at the 31st of December 2024. We target to have more listings this year, and I shall reveal more when we look at our headline KPIs later. Now, let me pass the floor to Panoshila, who will take us through our detailed financials.
Thank you, Tan Sri and Datuk Umar. Assalamualaikum warahmatullahi wabarakatuh, and a very good afternoon to everyone present. So I will cover the next 3 slides explaining Bursa's financials in greater details. So so this slide shows the snapshot of the quarter-on-quarter as well as the year-on-year performance. So starting with the top line, our operating revenue, of which approximately 68% is directly influenced by the market performance, increased by 27.8% to 757.7 million ringgit in financial year 2024 compared to financial year 2023. So the significant improvement in the operating revenue was mainly due to the double-digit growth in both the trading and non-trading revenue. So our quarterly operating revenue also registered a double-digit growth of 18.5%. As for the operating expenses, we saw an increase of 17.9% quarter-on-quarter and an increase of 26.8% year-on-year. So as a result of these movements, our financial year 2024 PATAMI increased by 22.9% compared to last year. So our cost to income ratio remains stable quarter-on-quarter as well as year-on-year at 54% and 48% respectively. Let me go through the details of this movement in the next slides. Okay, so this slide, as you can see, basically provide the details on the operating revenue. So our operating revenue, as mentioned, for financial year 2024 stood at 757.7 million ringgit, with the securities trading revenue being the largest contributor at 51%. So we saw a significant increase in the securities trading revenue of 43.1% to 381.5 million ringgit as compared to 266.6 million ringgit in financial year 2023. This was the result of the increase in the average daily value as explained by Dato' earlier. So on the derivatives trading revenue, which represents approximately 15% of the group's total operating revenue in financial year 2024, increased by 27%, mainly attributable to the higher average daily contract for FCPO as well as FKLI. So meanwhile, for Bursa's trading revenue, it experienced slight decline by 0.9% from 17.1 million in financial year 2023 to 16.9 million in financial year 2024. So mainly the decline is due to lower banking system liquidity as well as margin compression. We also recorded revenue from our new business, which is Bursa Gold Lina platform, of approximately 1 million for financial year 2024. Our non-trading revenue improved by 11.3% in financial year 2024, driven by higher contribution across all segments except for the conference fee and exhibition-related income. So the higher number of data subscribers led to increase in the data business revenue by 15.1% to 78.3 million in financial year 2024 against 68 million in financial year 2023. So we also saw higher depository services revenue by 18.5% to 63.5 million in financial year 2024 from 53.6 million in financial year 2023 due to higher public issue fees from the higher number of listings, account opening fees, and income from securities borrowing and lending. So our listing and the issuer services revenue also increased year on year by 7.3% to 70.4 million ringgit in financial year 2024 from 65.7 million ringgit in financial year 2023. This is mainly attributable to higher number of structured warrants as well as corporate exercises. Okay, moving on to operating expenses. We recorded an increase of approximately 27% in the total operating expenses year on year, largely due to lower OPEX base in 2023 from the reversal of SST provision on digital services. So if you exclude the one-off reversal of provision, our operating expenses would have increased by approximately 15% year on year, compared to the 27 that I mentioned earlier. So this increase was mainly attributed to higher staff as well as technology costs. We recorded a 14.9% higher higher staff cost in financial year 2024 to 193.8 million from 168.6 million in financial year 2023 as our headcount numbers increased to 681 from 639 as we build capacity for our new businesses as well as expanded and improved our services. We also provided higher variable performance rewards in line with our improved financial performance. This is also one of the main contributors to increase in the manpower cost. Whilst the increase in IT maintenance of about 17.5% to 42.5 million in financial year 2024 from 36.2 million in financial year 2023 was mainly due to renewal of maintenance contracts and commencement of maintenance contracts on new systems. Whilst the higher depreciation and amortization by 6.5% was mainly attributed to the depreciation for the refurbishment of the office building. The increase in service fees was in line with the higher number of derivatives contract traded. This is on the number of derivatives contract. The higher other operating expenses was mainly due to a one-off reversal provision, as I mentioned earlier. So the other operating expenses in 2021 actually recorded a negative amount because of the reversal. So these movements brought the total operating expenses for financial year 2024 to 373.4 million which is higher by 26.8% compared to 294.5 million recorded in financial year 2023. So with this, I hand back this session to Dato' Omar. Thank you.
Thank you, Sheila. Thank you, Sheila. In 2024, we laid a strong foundation to evolve into a multi-asset exchange by strengthening our core businesses, launching key systems-related initiatives, enhanced features, a new customer base for new businesses, for emerging businesses. All the while bolstering our customer experience, infrastructure and tools. Moving forward, we optimise for a strong future this year with exciting initiatives in pipeline and to build sustainability and resilience as a multi-asset exchange. And this will be focused around three key initiatives. Core strategy 1. This is first product and service expansion. Key initiatives to expand and enhance our product and service offerings will focus on continuing to strengthen our IPO pipeline. The introduction of commodity structured warrants, the launching of ESG ETFs, relaunching of single stock futures with enhanced product specifications. To enhance our multi-asset offering, we plan to expand environmental product offerings on the Bursa Carbon Exchange, build issuance pipeline for our debt fundraising platform, BR Capital, while broadening our ESG and data analytics solution. With regards to core strategy number 2, ecosystem development, we wish to further grow our ecosystem and to grow vibrancy and liquidity for our securities market. We'll intensify programs to elevate corporate performance, develop innovative solutions to democratise investing, such as facilitating fractional share trading, and strengthen the profile of PLCs via Bursa Rise. We'll focus on enhancing the ecosystem for our new asset classes. The initiatives include introducing gold savings plan for Bursa Goldina and enhancing investment experience with BI Capital via digital enhancements. And to deepen sustainability in our marketplace, we plan to onboard more companies on the CSI solution to promote efficiency and sustainability data collection, reporting and disclosure, and implement programs to enhance the capability and readiness of PLCs to adopt the National Sustainability Reporting Framework. With regards to core strategy number 3 around customer experience or CX, to provide a seamless and secure access to our products and services, we'll introduce new features on My Bursa, introduce BGD web application, and complete and ensure a smooth transition to BSUS 2.0. Lastly, we'll strengthen our market and customer support services with a customer support upgrade, marketing technology, and where appropriate, adoption of AI. Now, solidifying our position as a multi-asset exchange. As we aspire to be a truly multi-asset exchange by 2026, this slide is a depiction of what Bursa's shelf space could look like by then. We're optimistic about providing a marketplace with a wide range of capital market products by 2026, building on the current state of Bursa Malaysia today and striving to expand our offerings beyond the traditional exchange. Our headline KPIs for the year 2025. A profit before tax target between Ringgit Malaysia 369 million to Ringgit Malaysia 408 million. A non-trading revenue NTR growth rate of between 5 to 7% for financial year 2025. And IPOs and IPO market capitalisation of 60 IPOs, looking to raise Ringgit Malaysia 40.2 billion in total IPO market cap. And we continue with our reduction in organisational carbon footprint with a reduction of 10% in Scope 1 and Scope 2 from emissions in financial year 2022. To build on the robust economic performance in 2024, the nation's key strengths in export sectors, resilient domestic consumption and growing prominence as an investment hub, and of course the leadership of the ASEAN Chair, is expected to augment a conducive investment environment in 2025. And this brings to an end the close of my presentation. and I'm happy to take questions. Tan Sri?
Well, thank you, Dr. Umar. Ladies and gentlemen, in its January 2025 report, the World Bank projects the global economic growth to be steady at 2.7%, supported by moderating inflation and easing monetary policies in advanced economies and emerging markets alike. However, this outlook may be tempered by heightened policy uncertainties, persistent geopolitical tensions, and the rivalry between major powers, particularly between the US and China, which could disrupt trade investment decisions and potentially leading to greater volatility in the global financial markets. Now, studying these external headwinds, the outlook for ASEAN's economy appears brighter. The GDP of the ASEAN 5 countries is expected to hold steady at 4.6% in 2025. And similarly, Malaysia's economy is forecast to remain robust, with the official forecast of between 4.5% and 5.5% in 2025. And this resilience will be driven by strong domestic demand, bolstered by firmer consumer spending, continued high realization of approved investments, and the implementation of catalytic initiatives under the various national master plans, such as the Johor Singapore Special Economic Zone and the recently launched Penang Light Rail Transit projects. Now, Malaysia's strong economic fundamentals will suggest that the carbon market is likely to sustain and likely to experience another resilient year. This favorable outlook is anticipated to sustain investor confidence, to stimulate investments, and increase market activity. Ladies and gentlemen, our achievements in 2024 have laid a solid foundation to fuel our growth journey in the coming years, and we will leverage this strong footing to unlock greater value for our stakeholders. And in this respect, we remain committed to strengthening the exchange's value proposition to drive continued growth in the capital market and to enhance its vibrancy and attractiveness. And as we move into the second year of our strategy roadmap for 2024-2026, we will focus on improving our products and services, ecosystem, and customer experience. And these efforts aim to intensify the depth and breadth of our marketplace, better supporting investing, trading, and fundraising activities. And Bursa Malaysia in particular will also remain committed to advancing the nation's capital market and supporting its transition towards low carbon economy. And to this end, we will scale up efforts to demonstrate leadership in advocating for robust ESG practices, and some of these initiatives in the pipeline would include facilitating comprehensive ESG disclosures and strengthening public listed companies' capacity for ESG excellence. As Malaysia assumes the ASEAN chair for 2025, the exchange on our part will also strengthen regional collaborations and enhance linkages with bosses and the ecosystem across ASEAN, particularly through initiatives like the ASEAN Interconnected Sustainability Ecosystem and the ASEAN Common Carbon Framework to further boost the region's attractiveness and resilience. And in the ever-evolving market landscape, stakeholder collaboration is key, and we will continue to pursue engagements and collaborations with all stakeholders, industry partners, ministries and agencies to collectively address emerging challenges and cultivate a business environment that is conducive, inclusive, and sustainable for all market participants. Ladies and gentlemen, we have been fortunate to have Dato' Umar serving us for the past 6 years, and Dato' Umar is due to retire at the end of February. Now, on behalf of the board, we extend our utmost gratitude to Dato' Umar for his outstanding contributions and leadership marked by innovation, integrity, as well as a deep commitment and collaborative approach to serving the diverse needs of our stakeholders and the nation. Dato' Umar will be remembered for many significant contributions and achievements during his tenure, including, among others, setting the vision and roadmap for Bursa Malaysia to be a multi-asset exchange, keeping the markets open with full operational trading throughout the COVID-19 pandemic period, and steering the exchange into a new era of sustainability, customer centricity, and digitalization. Now, I've had the benefit of working with Dato' Umar for the past 5 years, And indeed, Dato' Umar, thank you for all your past services. Thank you. Appreciate that. And as part of our orderly transition, the board had embarked on relevant search, and we are pleased to announce the appointment of Dato' Fadil Muhammad as the next CEO to take over Bursa Malaysia forward, building on the strong progress led by Dato' Umar and Dato' Fadil's understanding of the capital markets and investment banking would set him in solid state to lead the exchange into the future. And we are confident that his expertise will drive continued growth and success for the exchange and for the marketplace. Now, ladies and gentlemen, as an integral enabler of the nation's economic development, the Malaysian capital market remains a crucial linchpin of our country's economic growth and wealth creation. And it is therefore critical that we continue to enhance the competitiveness of the Malaysian capital market by being responsive to the needs of businesses and customers while sustaining our position as a trusted and resilient marketplace. And although the road ahead may be challenging, we are confident that the initiatives we have undertaken and those planned will enable us to maintain our momentum. And with the continued support of our stakeholders, we will, inshallah, progress steadily as a competitive and dynamic multi-asset exchange. With that, I thank you for your attention. We'll be happy to answer any questions you may have. Thank you.
Thank you, Tan Sri Wahid, Dato' Umar and Puan Rashida, for your presentations. Now we'll proceed to the Q&A session with our esteemed panelists. Please raise your hands if you have any questions, and we'll pass the microphone on to you. As for virtual attendees, we also invite you to communicate verbally with the panelists by clicking on the raise your hand icon, and our moderators will grant you access for you to ask questions live. Alternatively, you may also click on the Q&A icon, which can be found at the bottom of the screen, and you'll be able to type out your questions there. I wish to remind both physical and virtual attendees to please state your name and organization before you ask your questions. Dato' Umar, the floor is yours for this session.
Thank you, Izrit. We have I'll take the first virtual question from Amanda Lopez. What are the factors that have made this year, 2024, better than 2023? And where we'll be going next year, or this year rather, 2025? I mean, the key as we look at it, it's not one single factor. It's a stable government, strong growth. We're driven by domestic liquidity. And as we look at 2025, we considered our listing funnel. And what we see in our listing funnel is, we expect 60 companies. I nearly made a slip of the tongue. I have a different figure in mind, Tan Sri, but that's not. That will be something for the team to deliver as I smile. And I think we can do better than 60, but anyway, our headline KPI is 60. I don't understand. And where will we see these 60 companies come from? They're going to be drawn from health, energy, construction, trading. It is a very diverse group. There's not one single. We look forward to welcoming MMC Ports back to the exchange. So we have infrastructure listings as well. But questions from the floor, please.
Do you have any questions from the floor, please? Yes.
Hi, Dr. Umar, Anis from The Edge. I wanted to add to your answer just now about the IPO market. What about the lead market? Because it's still not as popular as other market. Do you see that we can hit double-digit listing for the lead markets, or how we wanted to make it more interesting?
Yeah, I think in a similar forum last year or half year, I took the same question. I think LEAP, when we look at LEAP, our expectation is we saw 5 successful transitions from LEAP to ACE, which actually shows LEAP serves its purpose when we engage entrepreneurs. So we know there's approximately double-digit companies thinking about going to the LEAP market. But that being said, the ACE market is robust, and so if one of the pieces we have been working on is building more advisors for the LEAP market to allow them to be processed. So if you like, that is a key bottleneck. So we have demand, we now need to work on fulfillment.
Thank you, Dato' Umar. Thank you, Anis, for the question. Any other questions from the floor, please? Do you have any live questions? questions at the moment, moderators? No live questions? Panelists, we have no more further questions. Oh, we do. Please, ma'am. Oh, sir. Okay.
Hello, I'm Mahdi from Asia News Today. About the CSI reporting, how many companies that had been submitted their reports on the CSI and on the CSI companies? Because as we know that it will affect also the companies around the listed companies. Okay, right? Thank you.
Thank you for the question. What we have is, there are different modules on the CSI component. At the moment, we have some 100 companies subscribed to the solution. And as we go forward, this will be the year that they actually submit on the platform, because they're new subscribers, particularly for the year ending 2025. Now, what will be interesting to see is we are quite ambitious, because it's not just the PLC. It is about leaving no one behind, including the SMEs and SMEs. And so to that end, we're working to build capacity to ensure that everyone can make the necessary reporting.
Thank you, Dr. Umar. Thank you, Mahdi, for your question. Miss?
Hi, I'm Gloria from the Malaysian Reserve. My question is, some market observers argue minority shareholders have received a raw deal in the MAHB privatization process. In your view, was there anything amiss in protecting and enhancing their interest in the entire process?
I suppose everyone's looking at me, so that's probably my question to answer. At the end of the day, it's governed by the rules, and the Securities Commission, Dr. Vay's actually made a comment on. The process is one of choice. Every shareholder has the opportunity to exercise their right. So at the end of the day, it's a question of making an informed decision. So at this point in time, due process has taken part.
Any observations on the entire process so far? Okay, what happens once MAHB is delisted and removed from the KLCI?
It's delisted and removed from FBM KLCI?
Do you know of what happens once it's delisted or?
No, we don't manage the company.
Okay, all right, thank you.
Thank you, Gloria, for your question. Oh, we do have one question online. Tan Sri? For Tan Sri Chairman, please, what are the immediate priorities for Datuk Fadil as he takes on the role of CEO?
Well, thank you, Hayatul, for that question. So obviously, from the board's perspective, we do want to ensure it is a fair and orderly transition between Datuk Umar and Datuk Fadil. And the plans that have been set out by Datuk Umar, that has been approved by the board. So it's actually a collective decision report for the stock exchange to actually move forward, and in particular following through on our commitment to be a multi-asset exchange. Again, as a PLC with front line regulatory function, we will continue to uphold that. So obviously that will remain a control priority for the successor to Datuk Umar. And of course, we'll be having further conversation with Datuk Fadil once he is on board, and whether there are other areas to be reprioritized. That's something that we will have that conversation. But the commitment today is to follow through on the approved strategic plan and business plan as approved by the board. Thank you.
Thank you, Tan Sri. Thank you, Hayatul, for your question. I believe there are no further questions from the floor, audience, or online. So members of the media, ladies and gentlemen, I believe that the panelists have attended to... Oh, I didn't... Okay. Yes, Anis, my apologies.
I know, so no worries. My question is on the not recently, just this last Friday about YTL, non-tradable warrants. These are very uncommon. Maybe can you share your view on this? Because we heard that not so many shareholders are happy about this, but it's not wrong to do it, but it's very uncommon. So can you share your view on this?
Julian?
Julian, would you like to take the stand?
Yeah, come on, show your happy face.
There was an issuance of non-tradable warrants. Nothing common about it, I understand. That's something, the decision that the company decided to make as well. Feedback and all that, we're not sure that's really up to the company how we actually dealt with it. That's a start with you.
Bupinder's got a question. Can your derivatives market sustain the level of daily contract trades in 2025? Would you see room for growth? I must be mindful, because I'm not delivering the figure. That being said, there was an unusual amount of volatility in the market last year, to be fair to the team. So we think it'll trend flat. Now, the reason for that is the first half of the year, we saw a lot of, if you look at our figures, you'll see a lot of trading in FKLI. In the second half of the year, you saw CPO volatility. The derivatives market actually thrives on volatility, not high price, low price, but actually the expectation of price. Because the derivatives tool is actually used to mitigate risk, to lock in profit. And so when there is expectation of price movement, we see that producers and people that use our contracts, particularly, for example, if you're entering the market, you would use FKLI to lock in a position as you accumulate shares. If you are a user of CPO or a manufacturer or a plantation company, you use that contract to lock in the price you want. So when we have periods of volatility, these contracts do very well. When the market is stable, be it high or low, you're less likely to lock it in because you're of a view that you can, you don't have to pay that premium for that tool to lock in the price because the market is not dynamic and moving. A very good question. Thank you, Bupinda.
Thank you, Dato' Umar, for the explanation. I take it that...
Ya, Izri, kalau boleh saya balik kepada soalan Amanda dalam bahasa Malaysia, dalam bahasa Melayu. Tentang pipeline IPO. Jadi untuk tahun ini kita menjangkakan sebanyak 60 syarikat akan disenaraikan di Bursa Malaysia dengan sasaran nilai pasaran sebanyak 40.2 bilion. Jadi ini berdasarkan kepada pipeline yang agak strong, berdasarkan kepada submission yang dibuat. Sekarang ini pun kita ada 2 syarikat main board yang main market yang telah pun diluluskan dan bakal disenaraikan pada bulan Mac dan seterusnya. Dan ada 15 syarikat East Market yang telah pun diluluskan untuk disenaraikan. Dan selain itu ada beberapa lagi yang in the pipeline. Jadi dari segi purata nilai pasaran, kalau tahun lepas sekitar 620 juta ringgit nilai pasaran per company. Pada tahun ini kita sasarkan sekitar 670 juta ringgit setiap syarikat. Jadi ini termasuklah yang kecil dan yang besar. So secara puratanya 670 juta ringgit nilai pasaran setiap syarikat. Terima kasih.
Terima kasih, Tan Sri Wahid. Okay, dengan ini, members of the media, ladies and gentlemen, I believe for the panelists have attended to all the questions posed. Thank you, Tan Sri, Dato' Umar Rashida. And with this Q&A session concludes today's media briefing of Bursa Malaysia's financial results for the financial year 2024. Thank you very much, everyone.
Thank you. And selamat tahun baru Cina. Happy Chinese New Year.
Members of the media, ladies and gentlemen, we're hosting an analyst briefing shortly, so we've prepared some refreshments for you at the main lobby just outside the conference room. May I invite everyone to please proceed to the lobby for refreshments. Thank you.